And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
Unbelievably blessed.
I feel the same way. Absolutely. It's a beautiful day.
Yeah, we're clear of tax season, ready to rock.
And I love how we're coordinated today. We didn't even plan that, and it just happened.
Yeah, you know, I have my informants telling me how you're going to dress, and so I have my guy Peter from Brothers Tailors that always likes to have me looking sharp here.
He does, but Shay does the most. You're right. I mean, she's amazing. So let's give credit to Shay as well.
Sure.
So let's talk a little bit, if we could today, Stewart. What's going on in the markets right now? What are you seeing happening?
Well, you know, it's more of the same. Just crazy volatility. Supply chain issues are still a major problem. Ukraine is a disaster here, you know, presenting even more problems. We're seeing these massive interest rate hikes that are posing a problem for bond portfolios as well. So if you're in fixed income, you may want to reconsider some of those strategies there. You want to take a look to make sure that your risks are aligned with what your actual portfolio's in there as well. So no, we're seeing tons of craziness. It's more of the same. Just, you know, I feel like I'm a, you know, broken record player here saying the same stuff every week. But quite honestly, it's what we're seeing. You know, inflation is through the roof. You know, so we are seeing people that are getting a little less patient with having their cash available off to the side, where, you know, people that have sold property and really want to get invested in the market they're listening to my show and realizing, hey, you know what, our money's becoming worth less and less every day, you know, 9% or so less every day or every year by just keeping it in cash because your purchasing power is dropping. But quite honestly, I think it's really important to just have a plan.
Absolutely. Are you still hearing from a lot of people, Stewart, that are calling in for the very first time that do not have a plan for retirement? Yeah,
most don't. You know, I think we do really well. We have a really neat network of employees that work inside Honeywell and Boeing, and these engineers tend to talk to each other and share their experiences, and we work really well with the very technical people because we can, you know, we never try to over-talk our clients. You know, some of our greatest clients are people that aren't engineers, that are just kind of common blue-collar folk that have done their jobs and put their money away. But you know what? Engineers really like to step up the conversation when it comes to the nuts and bolts, right? The reason they're engineers is they really want to know how things work, right? They're the guys who tear things apart, look under the hood, make sure they understand how it works, right? And we can really talk that language as well. So we're seeing a broad response from people. You know, most people don't have a plan, even you know, coming from that engineering world. You know, they think they have a plan, but then, you know, when we throw out ideas, it just kind of like, it's like, you know, shaking their Etch-a-Sketch and starting all over again, because we tend to, you know, add new thoughts into the ideas.
Sure, that makes sense. Well, I should ask you, I'm sure a lot of viewers in the audience right now are wondering, what makes Asset Preservation Tax and Retirement Services different from all the rest of the companies?
Well, I think that besides just having me involved, I think the reality is that we are a one-stop shop. You know, we're a place where you can go get your estate planning done, your wealth management and financial planning, your portfolios, as well as your taxes. And I don't just mean tax preparation, but also tax planning. You can do all that in one shop. And I think people like to know, you know, as they enter into retirement, sometimes they're married, sometimes they're single, they want to know that either their surviving spouse has a place to go that they can call home, someone that they like and they can trust will be there from, you know, not just, you know, the next 6 months, because, you know, our advisors don't leave. You know, we've been in business for 25 years. We're celebrating our 25th year here in the next month. So we've been in business a long time. We're not going anywhere. And they want to know that they can deal with somewhere that's solid, that will survive the test of time. And listen, I'm the owner of the company. I'm not going anywhere. When people say, hey, are you going to retire? I got a long ways to go.
Yeah.
You know, there's other firms out there where you're kind of saying, man, the owner of this firm is, getting darn near retirement age, and is she going to be here forever? And you realize, no, they're not. And, I'm a lot further away from that than other ones. And if you're a financial advisor, and I don't want to be, ageist about this at all, but you really do have to think through, if you're a financial advisor, if you're going into retirement and your financial advisor's your age, are they going to be the ones really there to handle things when you're done working, into your 70s and 80s? Because they will be too. And most people are going to retire. I don't want to work forever. It just so happens that that's a lot further away from me than it is for others.
Sure, absolutely. Well, obviously, Stewart, you offer a one-stop shop, if you will. Why is that a benefit for your clients?
Well, number one, I've said it in previous shows, when people, talk to their advisors and they'll say, hey, you know what, we've been looking at these Roths. Does it make sense to do a Roth conversion? And the advisor will say, well, you know what, Roths are really good, but you need to talk to your tax person about how much you can do. And then the tax person says, you know what, you come here for tax preparation. You're not really here for tax planning. We can do that, but that'll be, $800 for a complete tax plan. Well, generally what happens is people don't want to have to pay all these exorbitant fees. And then, when the tax person says, hey, go talk to your financial advisor if you don't want to pay the fee, well, they're stuck because most firms are prohibiting their advisors from talking about tax. They don't want the liability of it. Listen, tax season's a complete nightmare of work, right? It occupies, a couple months of my year where it's really, really overwhelming. But, after it's all over, I say, you know what, I'm never going to do that again. And then I realize, no, that's the whole reason people come to us. Yeah. They love it because, we can handle all those things at one time. And look, we got them all done right in time. And, we did, I think it was like 750 tax returns this year. We've taken the approach that we don't do taxes anymore for people that are not financial clients unless they're, really good family members or friends of, financial clients. We just want to really focus on clients that have focused on us. We really want to make sure, we're not looking for a surface level relationship with 10,000 clients. We want a really deep relationship with 500 of them, and if what you're looking for is a surface level relationship where you talk to me every 5 years, we're not the fit for you. If you want an advisor that you're going to meet with 2 or 3 or 4 times a year and you have access to them year round, well, then we're the right firm.
Yeah.
We're going to talk about your financial planning as a one-stop shop. We're going to talk about tax planning. We're going to talk about estate planning. Do you have a living trust? Right? A living trust is so important to do. Everyone realizes they need to do it, but some people are so busy. Yeah. And here's the thing. I feel like a complete hypocrite because I've been preaching the benefits of a living trust forever. Yeah. I just got mine done last week, and I've been talking about it for years. People get busy and they don't have time to do it. I'm one of them. But do as I say, not as I do, right? Get it done. And I finally got mine done. Good. And you need to have a living trust. And what a living trust does is it basically says, that it enforces your will. And first of all, what a will does, I have to kind of delineate the difference between a will and a trust. And you know what, maybe what I'll do is after commercial break, we'll get into the details of the difference between a will and a trust. How does that sound?
That's perfect, Stewart. I know you have a very special offer to present to the viewers at home. Let's talk about that before we open the phone lines.
Yeah, what we're offering today is a complimentary portfolio review. If you just pick up your phone, click on that QR code that's on your screen right there, and that'll take you right to apsitaxes.com. That's our website. You can sign up for a complimentary portfolio review. A lot of people have been hesitant to call the 833-652-7829 number. They've been hesitant because it's the weekend and they figure, hey, there's no one there to answer your calls. But there is. 24 hours a day, we have someone answer. We have an answering service that'll take your calls, set an appointment with you. And what we're offering is to take a look at whether or not a one-stop shop really benefits you. What kind of risks are you taking in your portfolio? What kind of fees are you paying? And maybe it's worth having that conversation about the living trust that you've never done, but you need to. Or maybe, even better yet, maybe things have changed in your life and you need to update your trust. Give us a call at 833-652-7829. We'd be glad to take a look.
Stewart, thank you so much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We're going to take a very short commercial break, but don't go anywhere. When we come back, we're going to talk about the difference between a will and a trust. Stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Tax and Retirement Services. Stewart, a great show that we're having. As we went to the commercial break, we were talking about the difference, of course, between a will and a trust, and we're going to dive into that. And let's talk about how that correlates with estate planning overall.
Yeah, what estate planning is in general is just making sure that you have everything in order. Right? Planning out your estate. Now, most people will say, well, my attorney said I only need a will. And that may or may not be true. Right? So what a will does is it basically tells it tells the court exactly what you want to have happen with your assets. So if you cross the probatable threshold, generally $60,000 or $80,000, if you have more than $60,000 or $80,000 of assets, then it really generally makes sense to consider getting a trust. And you always want to make sure you're dealing with an attorney. Now, what a will does is it passes the assets to who you want it to give to. So for example, let's say you have a will and your will says that my house is going to my 3 kids. Well, when you pass away and your kids say, okay, well, we want to sell the house and take the money. Well, they're going to present a will, and they're going to say, hey, we want to sell this house. And the real estate agent's going to say, well, how do we know you have the right to sell it? I can't read that will. That's not. So it's a court basically releasing the asset through the probate process. That's what probate's about. It's not an evil process. There's nothing, evil about it. It's just expensive. And you end up being, consumed with attorney fees and time constraints and all of those kind of things. So people that make out probate to be this evil process, it's not evil. It's just time consuming and expensive, and it's a pain to deal with. But guess who you're paying? You're paying the attorneys to deal with it. Now, we have attorneys we've dealt with forever, and they're great. But, generally, they'll say, hey, probate's really kind of, it's overblown. It's really not that bad. And for them, it's not, because they get paid hourly to handle it, or they get paid by their statutory rate, depending on what state you're in. But what a trust does is a trust basically also passes assets to the people you want it to. But the difference, your house, for example, is in the title of the trust. So if you look at the title of your property and it has your name on it, well then, the issue is going to be that, even if you have a will, the probate court's generally going to have to get rid of it. However, if it's in the name of your trust, what it does is basically ownership doesn't change when you die, management changes of the trust. So you have successor trustees in line that are basically there to make sure you're taken care of and make sure the house is distributed and all of your other wishes are observed. Because remember, if you have a power of attorney, the power of attorney generally dies when you die. It ends when your life ends. So that's why it's really important to have a trustee. The will also handles part of that, but the trust only controls what it owns. And where we see tons of problems, Cynthia, with trust is that they're not properly funded, where people will have a living trust, but then they refinance their home and the trust or the house got taken out of the trust. And that's a big problem because you end up going through a probate process anyways, even with a living trust, if it's not properly funded, which is why you want to make sure when you're doing your financial reviews that your financial advisor can take a look at all those things.
Sure.
And then, to be honest, we're seeing the same things in estate planning that we see in financial planning, or in tax planning, where financial advisors don't really know what they're looking at.
Yeah.
Right? Which is why we have attorneys that we've dealt with. For the same attorney for 15 years has been doing our estate planning. We have those people on staff or available to us simply to make sure that, we're not the ones giving legal advice, and you don't want legal advice from me. You don't want tax advice from me. You want tax advice from our CPAs, from our enrolled agents. You want legal advice from a well-qualified estate planning attorney, and we have all of those available to our clients.
Stewart, you mentioned something very important. You said a person should ask their financial advisor. Well, that kind of made me think, what should people be looking for overall in a financial advisor?
Yeah, I think number one, it's really important that they're a fiduciary, most importantly. Now, I think that term's being used very loosely. So we're seeing insurance-only guys that aren't really financial advisors, but they're selling insurance products, life insurance products, for example. You'll see all of these. Gosh, I think they call it Tefra or Tesra. They have all these new names for basically what is just life insurance. And, you want to make sure that they're a Series 65 licensed fiduciary. That's an investment advisor representative. It's really, really important. The difference between a fiduciary and a broker is someone that basically has to put your interests first. A broker, while they're not intending to do you any harm, they're allowed to receive commissions from the sale of stocks. They're allowed to receive commissions from mutual funds. We are not. We are prohibited in our license from receiving any sort of back-end fees or commissions or anything. So when it comes time to dealing with whether or not you should be in this fund or this fund, you want to make sure that your advisor isn't being compensated differently between different funds. And as a fiduciary, we're not. We receive fees, advisory fees from the client, because you want to know that we work for you, not for the mutual fund company. So number one, fiduciary.
Okay.
Number two, you want to make sure they're a holistic planner.
Okay.
By holistic planner, we mean that you look at taxes, you look at estate planning like we talked about with living trusts. They can do financial planning all in one place. They need to be a holistic planner. They can also do real retirement planning, knowing the different stages of retirement, not only how to grow it, but how to take it out properly. And most importantly you want to make sure you can get that all done in one shop.
Absolutely. Well, Stewart, I know you have a very special offer to present to the viewers at home today. Let's talk about what that is before we reopen the phone lines.
Absolutely. If you have concern whether or not you are being treated in a fiduciary capacity, all you have to do is pick up your phone, click on the QR code, or call 833-652-7829. We'd be glad to give you a complimentary portfolio review. We'll take a look at any sort of issues you have with risk, any fees, any taxes regarding your portfolio, as well as estate planning. We can send it off to our attorney to analyze your trust to see if any changes actually need to be made. And that's all complimentary. There's no cost at all. But you have to take action today. Get off that couch, click that QR code, or call 833-652-7829 today. We'd be glad to help.
Stewart, thank you so much. To the viewers at home, the phone number to call is once again on your screen. That number is 833-652-7829. We know you have a lot of questions for Stewart about how to plan your perfect stress-free retirement. He has the answers for you. Remember, you can also click on the bottom of your screen there, right in the corner, the QR code. After this very short commercial break, I'm going to ask Stewart to talk a little bit about target date funds. So please stay tuned. We'll be right back.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is founder and president of Asset Preservation Tax and Retirement Services. Stewart, I'd love to talk to you in this segment about target date funds. What are they, and do they fit inside of a portfolio?
Yeah, you know, a few shows ago we talked about it, and we got a tremendous response. So I think we'll readdress it again to make sure we clear up a bunch of items outstanding. So what a target date fund was, originally it was created in the 90s by Barclays, which is a phenomenal company. Love the company, but they weren't intended for retirement. They were intended for college planning. And so basically, if your kid was going to college in 2025, for example, this target date fund would become more and more conservative as it got closer to that target date, right? And what they did essentially is they moved from equities to fixed income, so from stocks to bonds, so to speak. And that worked really well, during the last 35 years as interest rates have fallen. The issue with that there is that as interest rates have fallen, now we know that we're seeing this upward trend of interest rates, right? The Federal Reserve came out and said they were going to raise interest rates multiple times. We're going to see this fast rise in interest rates, presumably. And that presents a lot of issues with the bond portions of the portfolio. So normally, where we would see this transition to the safety, which is historically bonds, which has been true for 35 years, now there's actually tons of additional risk. So I just say, it's somewhat of a dated, strategy, so to speak. And I think that using it for retirement is using that same philosophy. Does it really make sense to go into these heavy bond positions that are adding very little upside with tons of downside potential? I would just say maybe, maybe not. The other thing is that, target date funds have become very competitive now. So, Company A that offers them and Company B that offers them, what people are doing is they're looking at results. How does the 2025 fund at Company A do compared to Company B? Well, what we're seeing now is companies starting to take additional risk, because if they're chasing yield, they're swinging for the fences, right? If it's just commoditized thing, right? This thing that you can just buy anywhere, it's just this do-it-yourself deal. Now what we're seeing is money managers on these funds take substantially higher risk, even above what their target should be, just to beat the guy next to them. And, because when you're in this commoditized thing, people are picking the best performers. And that's adding tons of risk unnecessarily to these portfolios in some cases.
Wow. Well, Stuart, I have to ask you, how can you help mitigate risk for people that are approaching their retirement years? What kind of advice can you give those folks?
Well, I think that rather than having a target date fund, maybe you should have a target date portfolio. And by a target date portfolio, that's a very active approach. And what we mean by that is that if you're just looking to set it and forget about it and not have to deal with that, well, that's when it's time to deal with a fiduciary, to deal with a financial advisor that has a plan that can adapt to your changing life. So what we do is, first of all, we never want all your eggs in one basket. I had a client that said, I'm going to have some of my money with you, some of my money at this company here, some over there. And what they thought was that everything that we did was through just my point of view, and it's not. We have, 4 different money managers we use that all have completely different points of view. Just think about this. If you watch one of the left-leaning news networks, you see the world one way. If you watch, the right-leaning network, you're on a completely different planet, right? There's multiple realities going on right now. And if you don't think that that affects your financial advisor or your money manager, think again. And if your financial advisor is the guy that's picking all the funds for you, Cynthia, that's a big risk, because what if he's wrong? What if he's wrong? You're going to put your entire life savings on the guy sitting across the desk from you to betting that he's going to be right? If we look back to, November of 2020, what happened? That was the elections, right? Once again, depends on what news channel you watch.
That's
it's
true.
How you're going to see the world.
That is true.
And we had multiple money managers. One of them that's designed to never lose more than 10%. Now, they've touched that threshold and surpassed it slightly here during this volatility, but they're designed not to exceed that threshold. They basically said, okay, well, in this portfolio that's designed not to lose more than 10%, in September of 2020, gross of fees, they were down like 3.3%. Then in October, they were down 1.5%. Well, what they did is they realized, okay, we're down 4.8% gross of fees before fees, and we're going to shift into safety, because we don't want to lose more than 10%. Because remember, the conservative thought was that if Biden won, the markets would fall because of higher taxes, higher regulation, etc. The other side thought, hey, if Trump won, there could be more social uprising, Antifa, all of these, people rioting in the streets, and that could bring social unrest, etc. But, so one of them went conservative. Our algorithm money manager shifted in safety, yet they still, gross of fee, made 0.68% in November of 2020. Then, the biggest money manager in the world, who's one of our other money managers, basically said, no, we believe Biden's going to win, and because of the spending and other reasons, that the market's going to, do well. So while the algorithm money manager hit the brakes and shifted to safety, our, the biggest money manager in the world, hit the gas. They did completely different things. And yet, going into November of 2020, the conservative approach still made 0.68%. Yet the guys who hit the gas made 7.5% in the same month.
Wow.
That's why it's important not to bet everything on one, to have multiple points of view. And at asset preservation, that's exactly what we do. We never expose you to a single point of view. We want you to have multiple perspectives, but you have to take action and call today. If you think that you're betting everything on one horse, pick up your phone, give us a call at 833-652-7829, or click on that QR code. We'd be glad to give you our second opinion.
Stewart, thank you so much for another amazing episode this week. I've enjoyed it. I know the viewers have as well. To the viewers at home, most specifically, we'd like to thank you for spending time with us today. That number to call is 833-652-7829. If you'd like, you can take your iPhone or your smartphone and just snap the QR code in the bottom of your screen. Again, any questions that you may have for Stewart, he has the answers for you. The number is 833-652-7829. Be safe, be happy, be blessed. We'll see you back here again 1 week from today. Take care.